to recap of why we're talking about this right now, this lawsuit came down. It's going to change real estate transactions. And there's a lot of conversation around the effect on the realtor and the effect on the home buyer and the home seller. On this show, we talk about things from an investor perspective, right? So when we think about what's happening, we're going to get into the transaction and how this affects the realtor because it's part of the equation. But when we are thinking about the effect of forces on the economy, on real estate, we know that as real estate investors in rental property investing, our biggest lever, the thing that brings the most wealth, is home price appreciation over time. So we are first talking about the effect on the pricing of real estate and whether or not the value of real estate is going to go up or down. And what you are saying is that the transactional effect of a change in what commissions happen during a transaction is one thing that could affect home prices, but we historically know that the biggest thing that affects home prices is supply and demand, followed quickly, and something that really, really affects demand is interest rate.
Yes.
And we just took a haymaker to the face on interest rates, and that did not bring down pricing of real estate because the supply out there does not come anywhere close to matching the demand. And based on trends that are happening, we still haven't come anywhere close to catching up with the new demand that happened last year with replacing that. And therefore, the fact that prices would go down because of a fixed to like the transactional cost of real estate in lieu of a historic rise in interest rates not affecting pricing is unlikely to happen in the immediate future.
I think you said that really well. Put yourself back in the shoes of in early 2022 before interest rates went up and say to yourself, which do you think would have a larger effect on potentially lowering housing prices, rates going up from 3% to 8%, or potentially
how you negotiate
real estate commissions coming down 1 to maybe 3%?
Yeah. Let's talk about it from the buyer's perspective, from the demand side. Is this going to affect prices?
Okay, so let's set the scene for what will really impact the buyer decision. People make decisions on buying real estate based on monthly payments. And the greatest lever to pull when it comes to monthly payments is the interest rate. And we're in an environment right now where inflation has gotten more and more under control. And the Fed, which sets the rate, which indirectly affects interest rates, the Fed has already kept their Fed funds rate the same for multiple quarters now, and they've signaled 3 rate decreases over the course of the next year. That doesn't necessarily mean it'll happen, but when the Fed signals something, they do it with intentionality, and they're usually right about what they say they're going to do. So most people in the economy are expecting interest rates to go down at some point in time. It's a matter of when, not if. So if you're thinking about yourself as an owner of assets, or let's take the buyer. Let's say you're the buyer here, and you're starting to think about monthly payments as the way that you're going to be able to make a decision on buying a house. You're in for a whole lot more home price affordability in the near future when interest rates come down than potentially what would happen as far as commissions going down. So I ran some numbers, okay? The Fed has signaled that interest rates the Fed funds rate is going to have 3 quarter-point decreases over the course of the next year. Let's just assume that interest rates dropped 3/4 of a point. Home values could go up another 8% if interest rates dropped 3/4 of a point, and the payment would still stay the same. Okay. Remember, buyers make decisions on payments.
Yeah. So as a buyer, so what you're saying is the Fed is signaling drop in rates, right? And buyers make a decision based on how much home can I afford. It doesn't have to do with the sticker price. It has to do with my mortgage,
right?
Like what I am substituting my rent for, right? And if there's a 3/4 drop in rates, the same way that which is what the Fed is signaling, and there's an 8% rise in prices, me as a buyer, I'm still thinking, oh, okay, well, if it comes down to a decision of rent or buy. I could buy, own, have all the benefits of the American dream, and still my payments are going to stay the same, and I get all these other benefits, even if prices go up 8%.
That's right. Compared to what home prices are right now and payments are right now, if interest rates would drop 3/4 of a point, like the Fed is largely signaling, your payment would still stay the same. And you have thousands of people each month buying these homes in Jacksonville at this higher monthly payment right now.
Yeah.
So again, I'm thinking about beyond just like the feel of this and beyond just, the emotional component that we all want home price affordability to be more and more of a reality for everybody. At the end of the day, the thing that's really going to move the needle here is interest rates coming down. And if you believe the Fed that they are signaling lower Fed funds rate decreases over the course of the next year, then that is going to way trump whatever effect 1 to 3% lower real estate commission would have on housing prices. So the long story long here, if you're coming from the buyer's perspective, you're making decisions on monthly payments. Your monthly payments are about to go down if interest rates go down, and likely home prices will go up, which will dwarf whatever potential decline that may come from the commissions.
So we started this segment of pricing talking about this idea that real estate prices don't move in a vacuum, and we've talked about it a lot on the show. And when it comes to the idea of us as somebody entering the market to purchase a home, saying, hey, now that I can renegotiate with my buyer's agent, my negotiation with my buyer's agent is going to allow me to say, I don't want to pay full price for this house. I want to pay 3% less for this house, or 2% less for this house, or 1% less for this house. And that affecting the overall price point of homes and the value of homes seems unlikely, based on the fact that there's not that much supply out, so the buyer is still not the person dictating it, but also the idea that as a buyer, I make decisions based on what my monthly payment is going to end up being, and based on what the Fed is signaling. What it looks like is going to happen is that there is going to be a decrease in interest rates, which means that as a monthly payment, I'm going to be more inclined to go buy that home for my family that I want to live in, and I want to start, creating this like American dream scenario based on what I can afford. I'm going to be more likely to accept higher prices than I am more likely to demand lower prices, because interest rates are going to go down.
You can demand it all you want, but nobody's going to listen to you because there's going to be more demand. There's going to be more house buyers like you that are entering the marketplace, and we still are undersupplied.
Yeah.
So that's going to force housing prices to go up rather than go down.
Got it. So summary on the pricing part, right? We're going to talk about pricing. Now we're going to talk about behavior of the market for realtors, because they're a part of the ecosystem. But to summarize the pricing discussion, which is what all these headlines are leading with, every headline is home prices may drop because of litigation thing with the NAR, right? We've talked about it from the idea of the macroeconomics of real estate still showing that there is a dearth in supply and an excess in demand. And this idea that like the levers that move real estate pricing, the transaction and the commissions in comparison to like how we see interest rates driving it, is probably not equal. And we just realized that housing prices, because of the supply demand dynamics, were able to survive the historic interest rate hikes. We don't think that that's going to cause prices to lower. Then we talked about from the seller side of it, the idea of supply is the problem here. If I'm going to bring supply to the market, the seller is not going to be motivated to say, oh, now that there's a drop in commissions, I'm just going to give somebody else a deal. They're going to say, no. Supply is still on my side versus demand. So I'm just going to take that money for myself. So the person that owns the home is still going to like want to reap the value. And then from the buyer dynamics, you might be able to go renegotiate with your realtor and say, I want less commission structure, but that still is not going to put you in a position to enforce a price drop, because at the end of the day, you're looking at it from what's best for you, what's best for your family. You're going to want to buy as much home as you can and lock that in. And that's likely not going to happen. And again, we're looking at all this because we are real estate investors, and we understand that the value of our investment long-term comes from home price appreciation. So we're evaluating prices from that regard. And you don't believe, GC, if I'm hearing correctly, that this NAR lawsuit in the short term is going to cause the drop in pricing that the media is promising.
That's correct.
Okay. Once again, out on a limb, predicted that home prices won't drop for probably about the third or fourth time on this show, which I think is cool, man. It's the data with perspective.
There you go.